Good evening, everybody. Let us quickly start wherever we stopped yesterday. Now, I think today we have to start with two last concept of the topic. That is, first, accounting of the leases in the books of lesser and lesser for the operating lease. So we have to understand the accounting treatment of operating lease first, and then we have to conclude with one last part of the topic, that is with respect to sale and lease back. Right, that will take some time. Now we'll quickly talk about the operating lease. Sir, the leases other than financial lease are called as operating lease. So the major difference over here will that the risk and reward incidental to the ownership of the asset will not get transferred to the lessee. Means technically the legal owner as well as the owner in reality, that is substance over form also logic will not appear over here because the owner will be the lessor himself. The asset will be shown in the balance sheet of the lessor only. Depreciation claims, impairment claims, everything will be done by the lessor only. Lessee will just use the asset and pay the lease rentals to the lessor on timely basis. That is, it can be either monthly or yearly as the case may be. And whatever lease rentals, whatever lease rentals the lessee is paying to the lessor will be an expenditure for the lessee, and it will be debited to the profit and loss account. And for the lessor, it will be an income which will be credited to the P&L account. So here, no logic of bifurcating the principal, interest, and so on, because this is not a financial arrangement between two parties. See, finance lease is more of a financial arrangement and less of a rental type of transaction. But operating lease is purely a rental type of transaction where you are giving the asset on purely rental basis. So here, the intention of the lessor is not to earn the full cost plus a desired return from one lessee. He will earn it from multiple people. I'll give you my example. In Mumbai, we have a commercial shops. We have two commercial shops from last 30 years. And from last 30 years, it has been letted out to almost more than 20-25 people. Right? And technically, I am having the ownership with me only. All the risk and rewards of that particular shop are with me only. So for 1 year, I give it to somebody. For 2 years, I give it to somebody. But never is the risk and reward substantial to the risk and reward incidental to the ownership are substantially transferred to the lessee. Never, it is never transferred. All the risk and reward stay with me. So whatever they make a payment to me, that is my income. That goes directly to P&L account credit side, and whatever they pay, they will account it directly in their P&L account debit side. So till today, I can wind it up over here. Till today, whatever rent paid you saw in your final accounts, the rent debited to P&L and rent credited to P&L, that rent was purely with respect to your operating lease. Because I don't know how much did you understand about finance lease, but in finance lease, the rent word generally is nowhere seen. It is either the adjustment of principal and it is interest or finance charge. Right? We don't show principal and lease rent. No, we show principal adjustments and we show interest factor. So basically, the lease rentals that is paid every year, that lease rental is not recorded as a lease rental. It is first adjusted against the principal amount shown in the balance sheet, and second effect, the balance part is shown as a finance charge or a finance income, as the case may be. Right, so I'll just read up first in the books of the lessee what it says. The lease rentals payable should be recognized as an expense in the profit and loss account on straight line basis. But if there is a pattern of payment that is higher lease rental in earlier year and lower in later year, then recognize the expense as per the pattern. Means it may happen that every year the lease rentals are fixed. 1 lakh lease rental for 3 years. So technically record 1 lakh for 3 years. That is called a straight line method. Straight line means fixed amount every year. But sometimes some lease are like the total rent for 3 years. The total rent for 3 years is 3 lakh. But you have to make the payment in the ratio of 3:2:1. Means technically 1.5 lakh payment in the first year, 1 lakh payment in the second year, and balance 50,000 in the third year. So you have to record the expense in that same pattern. Means technically, I would say that on actuals, you have to record every year. If you use the property for 12 months, then technically record the rent of 12 months in the P&L account. As simple as that. Then in the books of lessor, same, we will now say opposite, because for lessee it was an expense, now for lessor it is an income. The lease rentals receivable should be recognized as an income in the profit and loss account on straight line basis or on the basis of any pattern which is available. Depreciation and depreciation and impairments on the asset should be accordingly charged. So technically the asset remains in the balance sheet of the lessor only. It will not go to the balance sheet of the lessee. Simple point. Don't even expect anything with respect to operating lease in exam. Right? They will never ask you any question based on operating lease because the treatment is that simple. So what journal entries will come, sir? So these are the basic journal entries that you have already seen in your CA foundation level or your 11th standard or 12th standard level. So I've written it in the PDF that I'm going to share it with you today. Journal entries for operating lease. First, in the books of lessee. So lessee will pay the rent. So when you make the payment of rent, what entry will pass? So rent account debit to bank account. Correct. And at the end of the year, rent will be transferred to P&L. So it is P&L account debit to rent account. These are the simple entries which you have already seen. Correct. Then in the books of lessor, for lessor, sir, it's an income. So rent received. So bank account debit to rent. And then it will be transferred to profit and loss account at the time of making final accounts. So transfer into P&L, it will be rent account debit to P&L. So rent technically goes to the credit side of the P&L account. So these are the basic journal entries that has to be passed in case of operating lease. No other entries will come. Like at what value the lease receivable or lease payable is recorded. No, everything you will see in the finance lease only. Here it is not there at least. So these are the basic entries that will arise. Right? These entries are there in the PDF file which I'm going to give you. So not to worry, these are already written. Right? So this is the simplest point we had to start with today. But now we have to move ahead with a very, very important point. And this is going to consume around 20-25 minutes of us from now. The concept of sale and leaseback transaction. So what exactly this transaction is all about, I'll first explain you that. And then we will talk about what accounting treatment we are going to learn over here. Now, sir, please understand one thing. Say this is one asset with me. Correct? I'm the owner of this asset. As you can see on your screen, blue color mouse. I'm the owner of this asset. The value of this asset is 5 crores. Right? So today what I'm doing is, I'm selling this asset to Anshul Bafna. To Anshul, I'm selling this. Right? And I am entering into a lease agreement with Anshul to take this asset back on lease basis. And I will again use it in my business. Means first I sold this asset to Anshul. And this same asset I'm taking back from Anshul on lease basis. And the lease can be any. It can be operating lease or it can be a finance lease. Any type of lease it may be. So half of them may be wondering, sir, why are you doing this? You already had the asset, na? So why are you doing like first you are selling the asset and then again taking it back on lease? Why are you doing all these things? Harsh Kumar is saying loan. Arey, no, it is nowhere a loan. It is very simple. I am selling this asset on paper, legally or in substance, I am selling this asset to Anshul. And I'm taking 5 crores from him. And then I again ask Anshul that please give me this asset on lease basis. Anshul said, okay, what type of lease? Any finance lease or operating lease, give it to me. I will use it in my business again. Now, some answers I'm getting, emergency requirement of cash, requirement of money. That is the correct answer. Tax planning and all is also there in this. You will be learning in section 32 depreciation, because generally such type of things are also done for evasion of tax, but income tax has made, I'll tell you, these are explanation number 3, 4, explanation number 3, 3A, 4, 3, 4 and 4A to section 43(1) of your Income Tax Act. Section 43(1) of the Income Tax Act talks about the cost of the asset. And explanations are given because many people try to make some loopholes in calculating the cost. So explanations are given in various situations. So I'm not linking income tax over here. We are doing accounting. So the major logic, 2-3 people gave me the answer that, sir, you are in urgent requirement of money, and that is the correct answer. And sir, this is one of the best way of raising immediate finance. So what we'll do, we will sell our own asset, take 5 crores, use it in our business, and on the other hand, we will take the asset on lease, because lease rentals comparatively will be very less. If the cost of the asset is 5 crores, and say if again I'm taking the asset on a 5 years lease, right? So the lease rentals will be 1 or 1.5 crore, not more than that. But today I am getting to use 5 crores in my business immediately, and lease rental I have to pay after 1 year. That is at the end of the year. Yes or no? So technically, such transactions are done only for immediate requirement of money. I will give you one of the best examples, say Indigo Airlines. Indigo Airlines are having, for example, 25 flights of their own, and balance flights they have taken on lease. So say, for example, Indigo is in urgent requirement of money. So Indigo decided what we will do is we will sell 10 aircrafts. One aircraft is costing 1200 crores. So 10 aircrafts we will sell, 12,000 crores we will raise, and we will sell the aircraft to a leasing company only. And from that same leasing company, we will again take it back on lease. We will lease back those same flights. So we got immediate 12,000 crores to use. And what we have to pay? Lease rentals that we can pay, no problem. Right? So it's a very, very simple and a common transaction that many of the enterprises in the market do this. This is a very common practice. So what are we learning here? Sir, there are 2 things coming over here. First, the sale transaction, and then the lease transaction. Correct? Now, let us first complete lease transaction. Sir, when it is a lease back, whether it is an operating lease or it is a finance lease, all the accounting treatment remain the same as whatever I have taught you. In the books of lessee, if say it's a finance lease, say it's a finance lease, lease back is a finance lease. So in the books of lessee, the lease liability and leased asset both will be shown at same values. And what are the same values? It will be lower of fair value of the asset or PV of MLP. Right? In the books of the lesser, lease receivable will be shown on the asset side at present value of gross investment, or you also call it as net investment. So lease back is not an issue. If it is an operating lease, we have just learned the asset remains in the balance sheet of the lessor only, and every month or every year, whatever lease payments are made, for the lessor it's a revenue, put it in P&L credit. For the lessee, it's a expenditure, put it on P&L debit. Topic is over. So what are we discussing here? Sir, we are discussing the first stage, the first part of the transaction, that is sale. So when the asset will be sold, can I say there will be a profit or a loss on sale? Yes or no? So we are here to discuss what should be the treatment of profit or loss on the sale. Because I don't know you remember this or not, when we were doing AS10, property, plant and equipment, I'm opening the AS10 slide. When we saw the derecognition of asset, there it was written that accounting, one minute, let me connect the pencil so that I can use the pointer. Yeah. When we were doing the AS10 topic and we saw that when the derecognition takes place, derecognition means when the asset is eliminated from the balance sheet, either in the form of sale or by entering into a finance lease or by donation, right? Accounting treatment was the gain or loss arising on the sale of the asset should be recognized to P&L, unless AS19 on leases requires otherwise on a sale and leaseback transaction. So for a sale and leaseback transaction, the profit and loss is not directly recorded in the P&L account as it is shown by AS10. So here we have to understand that AS19 has given us the treatment of recognizing the profit or loss on the sale of the asset. And that is what we are going to learn over here now. Because AS then said that in case of sale and leaseback, the profit or loss on the sale of the asset will not be said by me, it will be said by AS 19, and we are going to learn it now. See, it is a normal sale, but since leaseback is also associated with it, the treatment of profit or loss is something different. I'll also give you the logic behind it. So what it says, when there is a sale and leaseback transaction, the lease accounting in the books of lessor and lessee remains the same. So lease accounting will be same, no change in lease accounting. So here we will learn the treatment of profit or loss on sale of the asset in the books of the seller, who will also be called as the lessee now, because the seller will now become the lessee and buyer will now become the lessor. So we call it as seller lessee, buyer lessor. Yes, because I sold the asset to Anshul, so I am seller, Anshul is buyer. Correct? Now I am again taking the asset on lease back from Anshul. So Anshul will become what? Lessor. I will become what? Lessee. So I was originally the seller, so now I am the lessee also. So seller lessee is buyer lessor. So we are going to understand the accounting treatment of only and only the profit or loss on the sale of the asset in my books. Correct? Now, sir, the profit or loss completely depends upon what type of lease it is. Now, God will save you if it's a finance lease because it gets over in one paragraph. But sir, if it is an operating lease, as you can see, so many situations we have to discuss. So many situations we have to discuss. I think 1, 2, 3, 4, 5, 6, 7, 8, 9, 8 situations we have to discuss. 8 various types of possibilities can arise with respect to operating lease. But for finance lease, it is very simple. Now, can I say, if it is a finance lease means asset will again come back in my balance sheet because I am the lessee. Substance over form logic, asset will again come back in the balance sheet of the lessee. So what they say, since a finance lease will give you a long-term benefit, right? What they say, any profit or loss on the sale of the asset should be deferred. Any profit or loss on the sale of the asset should be deferred in the same proportion of depreciation charged on the asset over the lease term. So, sir, it is very much similar. Deferment logic is very much similar to deferred grant that you did in AS12. So, say for example, if it's a leaseback is finance lease and I have a profit on sale, I have a profit on sale of say 100 rupees. So, what I should do, sir, first the profit on sale should be put on the balance sheet liability side, and then it will be deferred over the lease term. Now, say lease term is 10 years. Lease term is 10 years. So I have to defer this over the lease term, but in proportion of depreciation. So if I am charging 15% WDV depreciation on the leased asset, then the profit will also be amortized or deferred at 15% WDV only. Means it is exactly same as what you have done in AS12 deferred grant with respect to depreciable asset. Same thing. So what they say, any profit or loss on sale shall be deferred and amortized over the lease term in the same proportion in which depreciation is charged on the leased asset. So, sir, if it's a profit on sale, profit will be put on the balance sheet liability side, and every year it will be amortized on the P&L credit side in the same proportion of depre. But if it was a loss, then losses will not be put on the liability side. Losses will be put on the asset side. So the total loss first will be put on the asset side, and then it will be written off every year in the P&L account debit side in the same proportion of depreciation. Right? So very simple, no rocket science over here, and they will not even ask question based on this point, because questions are generally asked when it's a leaseback operating lease. Because here only one point is there, so for one point they will not ask you a 5-mark question. But here there are 8 different possibilities, so they will frame a 5 marks question and give you to and tell you to answer for at least 5 situations. One mark, one situation you have to answer. Right? So most important is what? The leaseback is an operating lease. Now, sir, before starting the treatment of profit or loss on sale if the leaseback is operating lease, sir, I would like to put one thumb rule over here. And the thumb rule is, sir, for any asset, there is always a fair value and there is always a selling price. Right? Means I will have a fair value of my asset, say at 20 rupees in the market. But what if, because of the sale and leaseback transaction, I am able to fetch 23 rupees from my buyer? So I can say that I have fetched 3 rupees more than the fair value. Right? I have fetched 3 rupees more than the fair value. Always remember, when you are getting something more than the fair value, the difference of selling price and fair value will always be a profit. And this is not a normal profit. So this profit should be amortized, deferred over the lease term. And here, not in proportion of depre, because it's an operating lease. And in operating lease, you don't charge depreciation on the asset. So here we just have to write it off over the lease term. I will repeat my point again. One thumb rule to be followed. If your selling price is greater than the fair value, the difference of selling price and fair value, say fair value was 20 rupees, I sold my asset to the buyer who has now become the lessor also at 23 rupees. So technically 3 rupees I was able to earn extra because of the sale and leaseback transaction, sir. If there would have been no sale and leaseback and normal asset would have been sold in the market, I could have fetched only 20 rupees technically. So 3 rupees I am fetching extra today. So this will not be recorded directly in the P&L account. This 3 rupees extra, I'm telling you the logic now. This 3 rupees extra you have earned purely because of the sale and leaseback that you have done. Sale plus leaseback, both you have done together. That is why the 3 rupees extra you are able to earn. So what AS 19 says, do one thing. Why to take the benefit in the first year itself in P&L? What is your lease term? Sir, lease term is 4 years. For operating lease term is 4 years. Defer in 4 years. Because technically this benefit of 3 rupees that you are getting is purely because of what? The lease back. So do one thing, for whatever is the time period of your lease back, amortize or defer it over the lease period. That is the logic behind this. So always keep your eyes open and check whether your selling price is becoming greater than fair value. Because wherever the selling price becomes greater than fair value, the difference of selling price and fair value is definitely a profit which has to be amortized. Right? So some shortcuts I have used. So I have just put it before only. BV is called as book value. That is nothing but the WDV only. Right? Fair value is FV. SP is selling price. And I have also written the rule over here. Selling price greater than fair value. If selling price is greater than fair value, deferment will come. Deferment means you have to defer the profits. Correct? Now let us start to understand the various situations. Sir, situation 1, first type of situation that can come. If selling price is equal to fair value. Sir, my selling price and fair value are equal. So one simple point, no deferment will come here. Because selling price and fair value are the same. So you are not fetching anything above the fair value. So technically any profit or loss that is going to come over here will be recorded immediately. Deferment generally comes when the selling price is greater than fair value. So if selling price and fair value both are same, means you are not able to fetch anything above the fair value of the market. Whatever profit you have earned, whatever loss you have incurred, record immediately. And I'll repeat this point again, sir. We are talking about the profit or loss on the sale of the asset. Because first I will sell, then I will lease it back. Right? So I am talking about the treatment of profit or loss on sale. So any profit or loss will be recognized immediately. And for every situation, sir, I have given numerical examples so that you understand it immediately. Now, first example I have shown for profit, second I have shown for loss. Sir, book value is 40. Fair value of the asset is 45. And selling price is also 45. Both are same. So no deferment. So technically what will be profit? Sir, profit is always selling price minus the WDV of the asset. Correct? So selling price is 45 and WDV is 40. So technically 5 rupees profit record immediately. That is put this 5 rupees directly to profit and loss account credit side immediately. Then second example, sir, book value is 40, fair value is only 37 and we also sold at 37. So fair value and selling price are same. Correct? So technically there will be a 3 rupees of loss and the entire loss will be recorded immediately to the profit and loss account. I hope the first situation is clear. It is very simple. But only point is it is lengthy. It's not difficult. It's lengthy. So you have to remember so many things. So one simple suggestion, first remember the thumb rule. That is amortization or deferment will come only when the selling price is greater than fair value. That is one logic. And so second, read at least 4 or 5 times before exam. And at least one day before exam you read and go, because a 5-mark question can come from this point. And we will also solve a question. Second situation, if fair value is greater than selling price. Now, sir, your fair market value is greater than the value at which you sold. Right? So, will deferment come here? Will deferment of profit come over here? No, sir. Why? Because selling price is less than fair value. So, deferment will definitely not come. Right? So, what they say, first part, profit should be recognized immediately. So, if there is a profit, it should be recorded immediately because deferment of profit cannot be done. Example, book value is 40 rupees, fair value is 50, but we sold at 45. So what will be profit for us? Selling price minus book value. So 45 minus 45 rupees of profit, record immediately. Record immediately. Now, sir, the point number B and point number C are with respect to losses. So this is bit tricky. Please understand. First, I'll do one thing. I'll put a numerical point and then I'll try to give the explanation. Now, see, it's an operating lease, correct? So lease rent is equal to say 1 lakh per annum. Okay. Similar lease is equal to 1,20,000. Similar lease in market. Similar lease in market means the same type of asset that you got. The same type of asset that you got is available in the market, but for a lease rent of 1,20,000. So can I say, sir, you are lucky? You got it for 1 lakh only. Yes or no? Right? So I will say that you have obtained your lease at a value which is less than the fair market value of your lease. Yes or no? And technically you are going to get the benefit of this lower lease payment for your entire lease term. Yes or no? Because, sir, you got it at a cheaper rate. You are lucky, sir. So what AS 19 says? In such case, you are getting a benefit, right? So against that benefit, what you do is the loss on sale of asset, amortize, defer over the lease term. So here, if the lease per annum is 1 lakh and market value of such type of lease is 1.2 lakh, means technically you are getting a benefit. You are compensated. You are compensated at a lower lease payment as compared to the fair market value. So you are paying less. So against this benefit, you defer the loss. You defer the loss. Right? But what if, sir, the similar lease in the market is available for 90,000 only? So can I say similar lease is available at a cheaper rate and you actually got it at a higher rate? So are you getting any benefit? Are you getting any benefit as compared to the lease rents in the market? Are you getting any benefit over and above the fair value? No, sir, I'm not getting a benefit. Rather, I have lost 10,000 extra every month or every year, sorry. So in that case, AS 19 says you are not compensated. You are not compensated by such lease rentals which are less than the fair values. You are actually paying more than the fair values. So in that case, record the loss immediately. Because no benefit. So against benefit, don't show any loss. Right? So record the loss immediately. But in the first case, you were benefited. You were benefited to the tune of 20,000 per annum, right? So since you are getting a benefit, against that benefit, you deferred the loss. So now I'll read the point for you. What it says, please be careful. Loss to be recorded immediately if not compensated by a future lease payments below the fair market value. Means I am not compensated by any future lease payments which are below the fair market value. So rather, I am paying more than the fair market value. So technically, I am not getting any compensation, as in just in terms of comparison. Nobody is going to come and pay you anything. So please don't get in the wrong way. What the statement means, if not compensated, means you're not getting any benefit in the form of lower lease payments as compared to the fair market value. If you're not getting any benefits, record loss immediately. But the loss is to be amortized over the lease term if now you are compensated by a future lease payment below the fair market value. Means technically you are making the payment of lease which is less than the fair market value. So you are actually getting the benefit of it. So if you're getting the benefit, amortize. If not getting the benefit, record immediately. Correct? Anybody with any problem till here? Because we have completed first and second situation, and we have also completed for finance lease. So 3 points I have covered. Anybody with any sort of queries for the first 3 points, please ask immediately. Then I will go ahead. Anshul Bapna not able to raise hand. Yes, unmute.
Sir, relating to the second point, the FE is greater than the selling price, right, sir? So, sir, in the second point, you have written the loss to be recorded immediately if not compensated by the future lease payment. Sir, means if we are getting a market value of the lease is 1,20,000 and we are getting the lease at 1 lakh, that's the point, sir. Second one. So,
yeah, that is the point.
So, sir, we have to compare the profit with the book value or the present and selling price, sir.
Sir, profits are always 1 minute. See, profit or losses are always compared between book value and the selling price. That is your actual profit. That is your actual profit.
Actual profit.
Right? But now some situations will come where you will compare first book value and fair value, and then fair value and selling price. And I'll also tell you the logics accordingly. But end of the day, what is my net profit or loss on sale? It is nothing but the difference between selling price and book value.
Selling price and book value. So, sir, in this loss arises means fair value is greater than the selling price. How loss will arise, sir? Because okay, the book value will be greater than the selling price, right, sir?
Exactly.
So in the third point, sir, the loss in the second point we don't amortize the loss, sir. In the third point we amortize just it.
Yes.
Where we get more cheaper.
What you are doing? Second and third point are basically same. Just you have to check whether what lease rents you are paying is less than fair value or greater than fair value. If lease rentals are less than the fair value of the lease, then you amortize. The loss.
Sir, explain with the number, sir. Explain with the number, right?
I have already given you example.
No, sir. Means what you do. Understood, sir.
This is the example.
Okay, the lease rent of our we are paying is 1 lakh per month per annum, right? So if the market is having a similar lease of 1,20,000, means we are getting the benefit of 20,000. So we have to amortize that 20,000, right, sir?
Why will I amortize this 20,000? This is notional, just for checking. We will amortize the loss. What are you doing? The loss on sale, I at least repeated 5 to 6 times. I am talking about the profit or loss on the sale of the asset. So whatever is the loss on sale, that will be amortized. Why will I amortize 1 lakh and 1,20,000 difference? I am just checking. The fair value of the lease is 120 in the market and I am getting at 1 lakh. So I am a lucky fellow. I am getting it for 1 lakh only.
Yes, sir.
So I am benefited. I am benefited by entering into such type of lease.
Yes.
It's simple. If one thing you are getting on Flipkart at 50,000 and same you get in Amazon at 47,000, you buy it Amazon at 47, and do you record the difference of 3,000?
No, sir. No, sir.
You just feel like, yes, I got 3,000 less, I got 3,000 less. 50 लोगों को you will say, to 50 people you will say, I got less at Amazon, I got less at Amazon. Yes or no? Or do you
Yes, sir.
record that 3,000?
No, sir. No, sir.
Then
So,
how
sir,
will I record the difference of
so,
this? It is
send,
just for comparison purpose.
okay, and in case of 90,000, we are paying 10,000 more. That's right.
Exactly. So we are actually paying more.
Paying more.
So we
Okay.
are not getting any benefit of lesser lease payments. Record the loss immediately.
Okay, okay, sir. Understood. Thank you,
Yeah.
sir.
Yeah. Sumuk.
Yeah, hello, sir. I just have a small clarification. So
Yes.
from in the books of lesser, whatever profits he's making is basically if the lease rental in total is more than the amount he purchased for, right?
And he will calculate accordingly, sir. He will find his IRR and
But
accordingly
that should he
charge
should
the
always
lease rental.
make a profit, right, sir? Otherwise, why would he want to
Sir,
get
as a
into this transaction?
businessman, your primary motive is to earn profit, sir.
Yeah, right, right.
We
Yeah.
are not doing any charitable activity over here.
Yeah, yeah. So lessee
And-
always makes a loss then,
Lessee always makes a loss means?
because he's selling at a price, and then when he's leasing it back, the lease rental will be more than what he sold for, right? So he's
Technically,
technically
yes.
making a
But
loss.
you are getting the benefit. You are technically getting the benefit of using, na?
Yeah,
Consider this
the
as a
benefit of
loan.
using is there, but finally, when you check the lease rental, it will be more, right? He'll anyway make a
Sir,
loss.
today if you take a loan today,
Hmm.
you will repay more only, na?
Yeah, right, right.
And this is, sir, finance fees is a financial arrangement only. The only
Yeah,
difference
okay.
is here you are using the asset also, plus you use the
Plus,
money
yeah,
also. So
got it,
technically
got
you
it.
will be paying extra only, na, sir?
Okay. Yeah. Okay, so that was my
Right? That is
clarification.
why we take loan.
Yeah, got it.
Yes, Sujit.
Sir, am I audible?
Yes.
Good evening, sir. Can you
Good
please
evening.
clarify the point compensated by future lease payment below fair market value?
Sir, I think we were discussing the same point with Anshul now.
Oh,
What were you doing, sir? I was discussing the same point with Anshul for the last 3 or 4 minutes, sir.
okay, sir.
Sir, please don't raise same type of queries again and again. When one same query is explained to someone, please focus now. Why you ignore the queries of other students? Because see, you are having the same point now. Now this will be the 4th time that I'll be explaining the same point. It doesn't make a sense. Unnecessary, it consumes time, sir. The same, what query you have raised with respect to compensated, the same point I was explaining to Anshul before you. What were you doing at that? You did not listen also, sir?
Yes, sir.
Huh? Did you listen to us or you did not even listen to us? Yes, Mr. Sujit,
Sir.
you did not listen to us.
Yes, sir, but I was spaced off during this. That's what happened.
Sir, at the end now. Not
Okay,
right
sir.
now. Yes, Vansh.
So just to clear, sir, so this point is the loss mentioned here is the difference between the fair value and the selling price, which is depending on the conditions of.
Arey yaar, what you people are doing, loss is not calculated by the difference of fair value and selling price. How do you calculate a loss on sale of an asset? You are doing it from 11th standard. How do you calculate the loss on sale of an asset?
Difference between the book value and the selling price.
Then why are you bringing fair value? Here we are comparing it, the fair value only with one and only one purpose. That is whether should I amortize the profit or loss or not, sorry.
Okay,
Right?
so sir, this example of book value is equal to 40 and selling price is equal to 45 is just for profit. In case book value is lower, we'll calculate the loss. That's it, sir?
Technically, yes. Book value lower, nahi, selling price lower.
I mean, sorry, my bad. Sorry, selling price lower. Yeah, got it, sir.
Hey, what you people
Got it, sir.
Book value is 40 and selling price is 37. So there will be loss of 3 rupees. So what should I do with this 3 rupees loss? Sir, that depends on these two statements. If I'm paying lesser lease as compared to the market prices, amortize the loss. If I am paying more lease as compared to the market prices, then no need to amortize. Write it off immediately in the profit and loss account. Sir, always remember,
Sir,
I 1 minute, Aditya. I am not able to understand why you people leave your basics. How many times in your life you have calculated the profit or loss on sale of an asset? So many times you have done. In 11th standard you have done, in 12th standard you have done, in foundation you have done. Again you are making a mistake over here now.
I confused the.
Our selling price, we compare our selling price with the fair value only with one intention, whether to check the profit will be amortized or not, because there is a thumb rule, and the thumb rule says that if the selling price is greater than fair value, so only the difference between selling price and fair value, only that part of the profit will be amortized, and balance everything has to be recorded immediately. Yes, Aditya.
Sir, I just have one doubt. Is there any minimum requirement that the similar lease rent should be this much more than the actual lease rent?
Nothing, sir. Nothing. Similar
No.
type of
Okay.
asset.
So it can be
just
even
go and
minimum.
check. There are no criteria, sir. There are no criteria.
Okay.
Fair value is available. Go and check
Alright.
if similar type of lease is there in the market. What is the fair value? If you have paid more than or less than that, decide your treatment accordingly. So there are no
Got it.
conditions,
Got it, sir.
nothing.
Thank you.
Just go and check. Similar type of asset is available. Okay. What is the rent? Okay, 1 lakh. I am paying how much? 90,000. Super. So I am paying less than what you are asking. So I am paying less than the fair value. As simple as that. Right? Now, the third situation. Now, in the third situation, what is the logic is the fair value is now less than the selling price. Now, we are going to discuss A, B, C, D, 4 situations. We are going to discuss A, B, C, D, 4 situations, right? And in all the 4 situations, you will find one thing in common, that my selling price will be greater than the fair value, right? So please understand, whenever the selling price will be greater than the fair value, the difference of fair value and selling price will definitely be a profit, and that has to be amortized. So let us see the first case. In the first case, the WDV of the asset, that is book value of the asset, and fair value are same. They both are same. And selling price is greater than both of them. Right? So please understand, since book value and fair value is same, the profit, that is selling price minus the book value, the total profit, I can say that it is that part of the profit which is greater than, which is because of the result, selling price is greater than fair value. So entire profit that will come over here has to be amortized. Has to be amortized. Because book value and fair value are same. So whatever profit I am earning, I can simply say that that is a result of selling price being greater than fair value. Because these two are same. So whatever the profit is there, it has to be amortized over the lease term. The profit shall be amortized over the lease term. Example, book value is 45, fair value is also 45. Correct? But sold at 53. Right? So technically what is profit? So profit is always selling price minus book value. Right? So selling price minus book value, 8 rupees. And sir, fair value of and selling price difference is also same, 8 rupees only. So technically entire 8 rupees shall be amortized over the lease term. So say lease term is 4 years. Write off this 8 rupees in 4 years. That is 2 rupees per annum you have to write off. Correct? That is the first situation. Second situation. Book value is less than fair value. Book value is less than fair value, but selling price is greater than both of them. Now, please understand here. If book value is less than the fair value, then sir, technically here, 2 types of profit should be recorded. 2 types of profits. Right? What are the 2 types of profits? Sir, fair value greater than book value. So the profit between fair value minus book value, first type of profit. And second type of profit will be selling price is greater than fair value. So difference of selling price and fair value. So 2 types of profit, because some part of the profit has to be recorded immediately and some part of the profit is to be amortized That is why I am not calculating one single profit. I am calculating two profits, but sir, the total of those two profit will be what? Selling price minus book value. Because sir, end of the day, how you calculate a profit or loss? Sir, end of the day, profit or loss is calculated by comparing the selling price and the book value only. But here, what I'm doing, I'm just bifurcating the profits because sir, I have a thumb rule over here, and my thumb rule is if I am fetching anything above the fair value, that profit has to be amortized. That is why I am calculating two different profits. First, the profit between difference of fair value and book value, that will be recorded immediately. And second, profit between selling price minus fair value. Now here I will say I have recovered more than the fair value, that has to be amortized. Right? So I will show two profits over here. One profit will be recognized immediately, that is fair value minus book value, and other profit, that is selling price minus fair value, shall be amortized over the lease term. Correct? Example: book value 45, fair value 49, sold at 52. Technically, 52 minus 45, 7 rupees is profit. But entire 7 rupees, I cannot put it to P&L. Reason, my selling price, some part of my selling price is greater than fair value. So whatever part of my selling price greater than fair value, that profit has to be amortized. So for that only one reason, I am showing two types of profits over here. So my first type of profit, fair value 49 minus book value 45. Means the logic is what? The profit to the extent of the fair value shall be recorded immediately. But any profit that arises because fair value being less than the selling price, so the difference of selling price and fair value should be amortized. So the first type of profit, 49 fair value minus 45 book value, 4 rupees record immediately. And second type of profit, that is difference of selling price 52 and fair value 49, 3 rupees you have to amortize. So the total 7 rupees. Total profit has to be 7 only, but out of 7, 4 to be recorded immediately and 3 to be amortized. This is the second situation. This you have to read many times. It's not easy. It's not at all easy. And you have to pay 100% focus. But just stick to the thumb rule. The person who has understood the thumb rule, for him it is peanuts. But the people still not understanding the thumb rule, for them it is cashew nuts. Peanuts is 200 rupees kg, cashew nut is 1200 rupees kg. Right? So 1200 per kg is not affordable, 200 is affordable. So people, those who have understood the logic, for them it is peanuts. They can immediately solve any type of question based on this. So one simple rule, sir. If your selling price is greater than fair value, so please trust me, you have to calculate the profit between fair value and selling price separately, and that profit will be amortized under any circumstance. But just wait for 2 minutes. Situation number C. Here, book value is greater than fair value. Book value is greater than fair value, but selling price is greater than both of them. Right? Sir, in such cases, first point, sir, we have learned the concept. If book value of the asset is greater than the fair value, what type of loss it is? We have learned something in AS10, last part. If the book value of the asset is greater than fair value, then we have to record a loss. What is the name of that loss? Impairment, correct. Same logic applies here. So, book value is greater than fair value. So, technically, the difference between book value and fair value is your impairment loss. That has to be recorded. Point number 1. And point number 2, selling price being greater than the fair value. Selling price being greater than the fair value. So, the difference of fair value and selling price will be recorded as a profit. So, here I will record loss and profit both. And the net result will be a net profit. Net profit, why? Because selling price is actually greater than the book value also. So please understand this. Loss, that is book value minus fair value, to be recorded immediately. And profit, that is selling price minus fair value, to be amortized over the lease term. So example, book value is 50 rupees, fair value is 48. But you landed up selling at 54. Right? So first, Book value minus fair value. Impairment loss 2 rupees. Record immediately. Correct? Point number 2. Sir, selling price greater than fair value by 6 rupees. So profit will be 54 minus 48. 6 rupees profit amortized. But if you see the net effect, 2 rupees loss, 6 rupees profit, net 4 rupee profit. And technically, sir, you have a net 4 rupee only because 54 worth of asset. Sorry, 50 rupees worth of asset is sold at 54. So technically net 4. Right? But we don't show directly net 4. We will show impairment loss separately, and then whatever portion of the selling price is greater than fair value, that is a profit that has to be amortized. So that is why all these bifurcations are shown. Yes, Bharat.
Sir, I have a small clarification. In case
Yes.
of SP greater than FC, the
Yes.
difference between SP
See,
and
you please,
FV
Bharat, you please.
is always amortized.
Bharat, wait. You please use the abbreviations correctly because you every time do a mistake. You read everything wrong and you confuse everybody. You please read it properly, sir. And you confuse everybody. Statutory warning.
Okay, sir. The difference between SP and FV is always amortized, right?
Yes,
In case of SP greater than FV.
correct.
And in case of FV greater than SP, we should consider the market price of similar lease rental.
What are you doing, yaar? Do you listen to the explanation or you are in your own world when something are getting explained? Because what are you speaking? I Anshul, you please keep your mouth shut here. Voice is getting echoed, so you please switch off your speaker. Yeah, you don't even see the situation and type whatever you want. Bharat, you please mute yourself first. Now, please, I did not even speak what you are saying, sir. I don't know what you understood. What point I explained and what are you telling it to me? Sir, you people are not able to understand simple thing here. The second situation has nothing to do as what you are saying. You have to just check the selling price and fair value only for one reason. That is, if the selling price part is greater than the fair value, then the profit should be amortized. Only that is the point you have to check. That is why we write these things, whether the selling price is greater than or less than the fair value. It has got nothing to do with whatever treatments we are showing over here. Please speak now.
Yes, sir. I understood that profit point. I said that in case of loss, we must see the market price of related lease payment. That was yes, sir.
So what is the doubt in that?
Yes, sir. I want a clarification. That's why I asked.
What clarification?
Sir, in case of loss, we have to see the market price of similar lease. Is that right? In case of FV is greater than SP.
Yes.
Okay. Sir.
He's actually going everything wrong. Bharat, you are completely wrong. You are actually taking the concept in a wrong sense. Sir, you people are not understanding. I don't know whether what is the situation with other people. These head points are written only with one intention, and that intention is what, that if the selling price goes beyond the fair value, then only amortization comes. That is what it is written. And some people are actually going it in a wrong sense. Means they are seeing that, sir, if fair value is greater than selling price, then only I will do amortization of loss. Sir, this amortization of loss has got nothing to do with this part. This part we have to check only with respect to whether if selling price is greater than fair value, then the difference of selling price and fair value is amortized. So only for that reason we are going to compare the selling price with fair value. So in this case, what we are saying is the selling price is not greater than fair value. So only one point to conclude: no profits will be amortized. Full stop. And this is over. No need even to see this. This point we are checking only with one reason: whether if my selling price is greater than the fair value, the difference of selling price and fair value will be amortized. But if the selling price is less, topic is over. Topic is over. Don't even see this again. Now check what is going on. In the first case, book value is 40, fair value is 50. Fine, my fair value is greater than my selling price. Superb. Nothing will be amortized with respect to profit. Topic is finished. Just check 45 of selling price, 40 of book value, 5 rupees profit, record immediately, because anyhow amortization will not come. Second and third case together, book value is 40, sold at 37, fair value is 50. No problem, sir. Anyhow, my selling price is less than fair value. So nothing will be, no part of the profit. That is selling price minus fair value, no profit will be amortized because my selling price is less than the fair value. So technically there is a loss of 3 rupees. So loss can either be amortized or can be recorded immediately. That completely depends upon the fair market value of other type of lease rents. So if you are paying greater than the fair market value of the lease, record loss immediately. But if you are paying less than the fair market value of the lease, you amortize. Point number D, last one. Please listen to the explanations properly. My one conclusion over here is made is, I think some people at the time of explanation, they are not 100% focusing. So if that is the case, please avoid. You will lose many points. Please be 100% attentive when explanations are going on. Don't do here and there, because see, I cannot control you. So you have to control yourself. So if any doubt is being cleared, please focus on that. Don't say that, "Arey, this is not my doubt, I will not." Because again, if you raise same doubt, because this is happening, this has happened so many times in the lecture, that one doubt I have cleared, again a person comes with the same doubt only. Because then it doesn't make any sense. Now, one topic only we are discussing 10 times in the batch then. Last situation, book value. Bharat, lower your hand. Book value is greater than fair value. Right? Book value is greater than fair value, and selling price is greater than fair value, but it is less than book value. This is the situation is asked in exam. Book value greater than fair value. If the book value is greater than fair value, point number 1, impairment loss. If book value is greater than fair value of the asset, impairment loss. Correct? Selling price greater than fair value. If selling price is greater than fair value, there will always be a profit, which has to be amortized. Correct? But selling price is less than the book value. Means you have sold at a price which is less than your book value, means, sir, overall there will be a loss. So when you record the impairment loss and when you record the profit to amortize, the difference between the loss and profit will be a net loss. Overall net loss. So, sir, why don't you record directly the net loss? Sir, I cannot do that. Reason, sir, my selling price is greater than fair value now. So I have to show the profit to be amortized separately. And that is why I have to do all these nonsense. So just see, loss. First situation, loss, the impairment loss, book value minus fair value to be recorded immediately. but there will be a profit also. What profit? Sir, since selling price is greater than fair value, the difference of selling price and fair value is to be amortized over the lease term. Over the lease term. Please try and understand the example. Sir, book value of the asset is 50 rupees. Fair value is 43. Book value is 50, fair value is 43, and we sold at 46. Now, please understand, 50 worth of asset is sold as 46. So, can I say there should be a net loss of 4 rupees? But this net loss will be recorded, see, in this way. First, I would say book value is greater than fair value means there is an impairment loss. So 50 rupees book value minus 43 rupees fair value, 7 rupees impairment loss, record immediately. Record immediately. Then selling price is 46, fair value is only 43. So difference between these two is how much? 3 rupees. That has to be amortized. So 7 of loss, 3 of profit, net 4 of loss. So you have to be very careful with the figures given in the question. And you have to make your decisions properly. And if you stick to this one thumb rule, you can solve this question in a very simple way. So always check whether your selling price is greater than the fair value. Yes, sir, it is greater. Amortized profit. Right? But if selling price is less than the fair value, then, sir, ignore the fact only, because no profit can be amortized. Because then you cannot calculate the difference of fair value minus selling price, say now it is a loss. No. Fair value is just a point of comparison. So if your fair value of the asset is 50 and you sold at 45, now you cannot say that 50 minus 45, 5 rupees is a loss. No, sir, that will not be seen also. That is to be ignored completely. Point of attention is what? If the selling price is greater than fair value. So if selling price is greater than fair value, that part of the profit has to be amortized. I give you, do you have the soft copy of this file with you now? You have the soft copies of this file. I give you around 5 minutes. Please go through all the points. After that, I'll go for the question. Please read all the points. I give you 5 minutes. After that, we'll go for the question. And strictly read it. Don't do here and there. I'm trying to keep this open in one single view, but I don't know whether it will come or not. Yes, it is coming in one single view. Yeah, I'm kept this open in one single view. I give you 5 minutes. Please read it. Then I'll start with the question. Strictly read it. Don't do here and there. Strictly read it. Yeah. You have to solve question number 6 of your study material, which is based on the concept of sale and leaseback. What it says, okay. Question number 6, what it says, A Limited sold machinery having a WDV of 40 lakhs to B Limited for 50 lakhs. So WDV is 40, selling price is 50, and the same machinery was leased back by B Limited to A Limited. And the lease back is operating lease. So here we are discussing about the profit or loss on the sale of asset by A Limited to B Limited. And the profit or loss treatment on the sale of asset is completely depending on whether what type of lease it is, which is clearly said over here, operating lease. So our problems are going to increase. And we have to answer in 6 different situations. Same question only, but they are asking us in 6 different situations. Means if selling price is this, then what will happen? If fair value is this, what will happen? Right? Book value will remain constant at 40. But they are changing various points and asking the question to us. So let us check what they are saying. Point number 1. If selling price is 50 lakh rupees, which is equal to fair value. Sir, if selling price 50 lakh is equal to the fair value, so your profit over here will be what? 50 lakh sold, 40 lakh WDV, 10 lakh rupees profit. Yes or no? And can this profit be amortized? Can this profit be amortized? Sir, technically no, because fair value and selling price is same. So amortization cannot come record immediately. Right? So what we'll do after the discussion of every point, we'll immediately write the answer. So I want please keep your notebooks and pens ready. I have to dictate answer because it will be in a theoretical form. So after every situation, we will write the answer immediately. We will not wait. So please start. Question number 6. Give the heading. Question number 6. Correct. Please write. The following will be the treatments as per AS 19. The following will be the treatment as per AS 19. The following will be the treatments as per AS 19. Point number A. Please write. When sell price of rupees 50 lakhs, when sale price of rupees 50 lakhs is equal to fair value, comma, when sale price of rupees 50 lakh is equal to fair value, comma, the profit rupees 10 lakhs, the profit rupees 10 lakhs, in the bracket you show 50 minus 40. In the bracket you show 50 minus 40. Should be recorded immediately. Should be recorded immediately in the books. Should be recorded immediately in the books. Full stop. First situation over. Second situation. Fair value this time is 60 lakhs. Fair value is 60 lakhs. So is it going to affect my actual profit? Is fair value going to affect my actual profit? No, sir. We just check fair value and selling price. Compare it once. Why? Because if selling price is greater than fair value, then amortization comes. But here, the fair value is greater than selling price. So no point of amortization will come. Ignore the fair value now. So what logic? Sir, selling price is 50 lakhs. WDV is 40 lakhs. So technically 10 lakhs of profit, correct? This will be recorded immediately. Because the fair value is greater than selling price, so obviously no amortization logics will arise over here. So directly 10 lakh of profit, record immediately. Correct? Are you getting this point? Just we are comparing. Fair value is 60 lakh. So fair market value is 60 lakh, no problem. We sold it at 50. Fine. So what is profit for us? Sir, our 40 lakh worth of asset is sold for 50 lakh. Superb. So we are at a 10 lakh profit. Record it immediately. Correct? So please write down the answer. Please write down the answer. When fair value is rupees 60 lakhs, comma, when fair value is rupees 60 lakhs, comma, when fair value is rupees 60 lakhs, comma, the profit of rupees 10 lakhs, you can repeat the same first point again. You can repeat the answer for A same to same after comma. The profit of rupees 10 lakhs should be recorded immediately in the book. Same first point you copy it again. Completed. Now third point. Fair value 45 lakh. Book value is same 40 lakh only. But now they say, what if the selling price becomes 38 lakhs? Sir, point number 1. Selling price is less than the fair value. So, sir, first point, that amortization of profit will not come. Correct? Ignore the fair value now. Fair value ko maro goli. Leave it aside. Fair value has got now nothing to do. Now, simply answer. 40 lakh worth of asset. 40 lakh worth of asset is sold for 38 lakhs. Can I say there is a 2 lakh loss? Right? So this 2 lakh will be recorded immediately if it is not compensated by a future lease payment below the fair value. Right? But if it is compensated by a future lease payment below the fair value, then it has to be amortized. Right? That logic is applied over here. So see, first what did I do? First, I just quickly compared the selling price with fair value. Right? And what answer did I give? Sir, selling price is less than fair value. So that amortization of profit part will not come. So next step, what did I do? Ignore the fair value. Kick out the fair value. Now directly what we have to check, sir, 40 lakh worth of asset is sold at 38. So there is a 2 lakh rupees loss. So that loss will be recorded immediately if it is not compensated by a future lease payment below the fair value. So please write the answer. When fair value is 45 lakh, please write the answer. When fair value is 45 lakh and sale price is 38 lakhs, comma, same question you have to copy. When fair value is 45 lakhs and sale price is 38 lakhs, comma, the loss of rupees 2 lakhs, the loss of rupees 2 lakhs, in the bracket you show 40 minus 38. 40 minus 38. The loss of rupees 2 lakhs, in the bracket you show 40 minus 38, close bracket, should be shown immediately. Should be recorded immediately. If it is not compensated, by a future lease payment, below the fair market values. Correct? Fourth point. Fair value is 40 and selling price is 50 lakhs. Now, sir, can I say in the D situation, selling price is now greater than the fair value. So amortization will now come, right? And the fair value is also equal to WDV of 40 lakhs only. So WDV and fair value both are same. So technically the entire profit of 10 lakh over here shall be amortized, because entire 10 lakh will be considered as greater than fair value. Profit because selling price is greater than fair value, so entire 10 lakh will be amortized. So please write the answer. Please write the answer. I'll write over here 50 minus 40, 10 lakh amortized profit. So please write the answer. When fair value is 40 lakhs and selling price is rupees 50 lakhs, copy paste the entire question. When fair value is 40 lakhs and selling price is 50 lakhs, comma. The profit rupees the profit rupees 10 lakhs. The profit rupees 10 lakhs. In the bracket you show 50 minus 40. Should be amortized over the lease term. Should be amortized over the lease term. Right? Fifth point. Fair value is 46 lakhs. Selling price is 50 lakhs. And WDV is 40. So can I say fair value is greater than WDV and selling price is greater than both of them? So I've got an answer. 6 lakh record immediately and 4 lakh amortize. Yes. Sir, here two profits I will show. That is first, the difference of fair value and WDV. That is 46 minus 40. 6 rupees record immediately. And the difference of selling price and fair value, 4 rupees of profit has to be amortized. So overall, there is a 10 rupees of profit. That is 40 of asset is sold for 50. So overall, there is a 10 rupee of profit, but 6 rupees will be recorded immediately. And 4 rupees profit is arising because selling price being greater than fair value by 4 rupees. So that profit has to be amortized. Correct? So let us put this point. When fair value is 46 lakh and sale price is 50 lakhs, comma. Note down the entire question and then put a comma. When fair value is 46 lakh and sale price is 50 lakhs, comma. The profit rupees 6 lakhs. The profit rupees 6 lakhs. That is difference of fair value and WDV. The profit rupees 6 lakhs, that is difference of fair value and WDV, should be immediately recorded in the books. Should be immediately recorded in the books. And profit rupees 4 lakhs and profit rupees 4 lakhs, that is difference of selling price and fair value. That is difference of selling price and fair value should be amortized over the lease term. Should be amortized over the lease term. Full stop. Correct. Now the last situation. Amortized 4 lakh and record 5 lakh loss immediately. Okay, Sanjana has given answer. Okay. Fair value is 35 lakhs now. Now, sir, please understand, fair value is less than WDV. So when the fair value is less than WDV, so it is impairment loss. So impairment loss, 5 lakh should be recorded immediately. Point number 1. And point number 2, selling price is greater than fair value. So selling price being greater than fair value, the difference of selling price and fair value, profit of 4 rupees to be amortized. And technically there will be a net loss of 1 rupee. How net loss? Sir, simple na, 40 lakh worth of asset is sold for 39. So there should be a net loss of 1 rupee. But we don't show directly net loss 1 rupee. We will show two things over here. First, loss. First, we will show loss. What is loss? Book value minus fair value. That is 40 minus 35. 5 rupees, we will say record now. And we will also say there is a profit. How profit? Selling price minus fair value. That is 39 minus 35. So we have a 4 rupees of profit amortize. And difference is 1 rupee net loss. Correct? Right? So let us put the answer for this now. First, write the question as it is. When fair value is 35 lakh and sale price is 39 lakh. Please write the question as it is. Put a comma after that. Please write. The loss of rupees 5 lakhs. The loss of rupees 5 lakhs. That is WD. That is difference of WDV and fair value. Loss of rupees 5 lakhs. That is difference of WDV and fair value. Record immediately in books. Record immediately in books. And profit of rupees 4 lakhs and profit of rupees 4 lakhs and profit of rupees 4 lakhs, that is difference of selling price and fair value. That is difference of selling price and fair value should be amortized over the lease term. Should be amortized over the lease term. Full stop. So here we complete question number 6. And conceptually the topic is over. Now we have to solve 2 more questions to wind up the topic. Right? And I think question number 3 and 5 we have to complete. 4 we have already done yesterday itself. Right? So we will be completing question number 3 and question number 5 first. So let us go for question number 3 first. Question number 3. What it says, Prakash Limited leased the machine to Badal Limited on the following terms. So Prakash Limited is the lessor and Badal Limited is the lessee. Correct? And what we have to calculate, ascertain the unearned finance income. Now, sir, unearned finance income is calculated by whom? Sir, it is calculated by the lessor. And the formula for unearned finance income was gross investment minus net investment. Correct? So this is what we have to do over here. and there is a full probability that gross investment might be given in the question, we just have to calculate the net investment by converting the gross to the present value. So present value of gross becomes net. So let us see what information is given. Fair value of the machine is 40 lakhs. Lease term is 5 years. Lease rental per annum is 8 lakhs. And guaranteed residual value is 1.6 lakh. And total expected residual value is 3 lakh. So, sir, if guaranteed is 1.6 and expected total is 3 lakh, so technically 1.5, 1.4 lakh becomes the unguaranteed value. Correct? Internal rate of return, IRR, is given at 15%. And discounting rate for all the 5 years at the rate of 15% is also calculated and given in the question itself. As I told you, it will be 99% printed in the question only, because then everybody will get the same answer. There will be no differences in answers. Right? Can I say gross investment is given in the question? What is gross investment? Sir, gross investment is MLP plus URV. MLP plus URV. And what is MLP? Sir, MLP is lease rentals plus guaranteed value. Lease rentals plus guaranteed value. So technically, lease rental, guaranteed value, unguaranteed value, all the three are given in the question. So I can work out my gross investment immediately. As you can see on your screen, gross investment I've done also. 8 lakh lease rental for 5 years. So 8 5s are 40 lakhs plus 8 5s are 40 lakhs plus 1.6 lakh guaranteed plus 1.4 lakh unguaranteed. Total 43 lakhs. So total 43 lakh is my gross investment. And what I have to do now, sir, convert this gross investment to present values, because these are obviously the future values, because the residual values we are going to get at the end of 5th year, and lease rentals also we are going to get at the end of 1st, 2nd, 3rd, and 4th and 5th year. So these are all technically future values. Convert them to present value by applying the discounting rates given in the question. So discount them to present value, and then compare your gross investment minus net investment. You get your unearned finance income. Right? So let us start with the solution. Gross investment is already there. Just discount them and find out the net investment. So this is actually a jackpot question in exam if this comes for 5 marks. Jackpot question. Question number 3. First, I would calculate gross investment. Sir, gross investment is nothing but MLP plus unguaranteed residual value. Unguaranteed residual value. Correct? So what is MLP? That need not you show. It is just for your reference. I'll say, sir, 8 lakh is the lease rental that I'm going to get for 5 years, plus 1 lakh 60 is the guaranteed residual value. So the total of these two items becomes your MLP, plus finally comes unguaranteed value of 1,40,000. So technically rupees 43 lakhs is your gross investment. Correct? Now we have to calculate the PV of gross investment, that is also called as net investment. So you can give any name to it, both are the same. So sir, how do we calculate this? Nothing, convert into present value. So formula also will be same, only I will add the word PV. Means present value of MLP plus present value of URV, that is unguaranteed residual value. Right? Now, sir, 8 lakhs we are going to get every year. So rather than multiplying it with individual discounting rates, we can take the total of all the discounting rates. So has anybody taken the total of all 5 discounting rates? All 5 years discounting rate 3.3522. Okay, 8 lakh into 3.3522 plus 1 lakh 60 is guaranteed value, and for guaranteed value it is we are going to get it, or we are going to receive it at the end of 5th year. So discounting rate will be applied at the end of 5th year, that is 0.4972. So 1 lakh 60 into 0.4972, and I will close my first bracket. The first bracket is PV of MLP. Plus I will now go for URV. 1,40,000 also we are going to get at the end of the 5th year into 0.4972. So 8 lakhs into 3.3522. So the first bracket 26,81,760 plus 1 lakh 60 into 0.4972, 79,552. This is the first bracket, that is MLP, plus 1 lakh 40,000 into 0.4972, 69,608, and plus MRC. The total value comes to 28,30,920. So this is the present value of gross investment, or you say net investment. So finally we go for the answer. Therefore, unearned finance income, unearned finance income will be what? So it is gross investment minus net investment. So my gross investment is given in the question at 43 lakhs minus net investment is 28,30,920. Right? So my unearned finance income, what is the difference now? Somebody answered it. 14,69,080 rupees. 14,69,080 rupees. So it's a jackpot question from the exam point of view for 5 marks. Very simple one. Copied everybody? Please complete it. Shall we go ahead? 5th question, and sir, this is, I would say, the best question so far we have solved in this topic. And this question has come many times in exam. And sir, definitely, if I don't give you a hint, there is a probability that you will not be in a position to solve the question only. It will be a difficult situation. Let us read the question, what it says. NDA Limited availed a lease from Induga Limited on the following terms. So the NDA has availed the lease. So NDA is the lessee, Induga is the lessor. Okay. A lease for a tenure of 3 years in the beginning of 2001 for an equipment costing rupees 7 lakhs, which has an expected life of 5 years. And the fair value of the market, or the fair market value, is also 7 lakhs. So the fair value of the asset is 7 lakh and the lease term is 3 years. Total life of the asset is 5 years. So can I say one thing, that 3 out of 5 means roughly exactly 60% of the life of the asset is covered by the lease term. Correct? Okay. I'm repeating. 3 years is the life of the lease or the term of the lease, and life of asset is 5 years. So technically 60% of the life of the asset is covered by the lease term. Okay. 3 equal annual payment. Annual payment means at the end of each year, lease rentals are to be paid. 3 equal annual installments for the lease. But sir, amount is not given. What is the lease rental is not given. Okay. The property reverts back to the lessor on termination of the lease. So technically the lessor is again going to take back the possession of the asset at the end of the lease. Right? So no problem, that can be done. That is allowed because lessee is not interested to keep the asset. So lessor will take back the asset. And he can do anything with that asset now. He can either lease it to somebody else or he can scrap it or use it by himself. That is his choice. So that is not our point of agenda. Correct? The unguaranteed residual value is estimated at 75,000 rupees at the end of the year 2003. Now, sir, unguaranteed residual value of 75,000 is given. Now, people will ask me, sir, why guaranteed is not there? Because the lessee is not interested to keep the asset. Lessee is giving back the asset. So why will he give you a guaranteed residual value? Yes or no? So that is why in the question guaranteed residual value is not there. Right? So only unguaranteed value. Unguaranteed means at the end of 5th year when the asset will be of no use, the lessor will sell it to somebody in the market and may fetch 75,000. That is why it is unguaranteed value. Correct? IRR is given. IRR is given at the rate of 10% in the question. So this is the IRR of the lessor. The present value factor is given of 10% at the end of 3rd year. So present value factor calculated at 10%. So they have given you the 3rd year's discounting rate. The statement used is actually not correct. The present value of 1 rupee due at the end of 3rd year at 10% rate of interest is 0.7513. So this is your 3rd year's discounting rate. And the present value of annuity of 1 rupee, you write it 1 rupee per annum. 1 rupee per annum due at the end of 3rd year. At 10% IRR is 2.4868, means this is the cumulative rate. 3 years ka total is given to you. Correct? 2 things they are asking. Point number 1. State with reason whether the lease constitutes a finance lease. And point number 2, calculate unearned finance income. Right? 2 things are given. First, they are asking you tell whether this is a finance lease or not. Sir, we had learned 5 factors stating that if 5 factors are covered or the majority of these 5 factors are covered, then you say that it's a finance lease. But I don't know whether you remember or not. I said that point factors 1 to 4 keep at one place, but the most important is the 5th factor. And the 5th factor was the present value of MLP. Present value of MLP substantially covers the fair value of the asset at the inception. Substantially covered, I said 70, 80, 85% also. If the present value of MLP is almost 80, 85% of the fair value, then it is considered as substantially covering. Right? But sir, I know 1 point for finance lease is covered. That is almost 60% of the life of the asset is covered by the lease term. So that 1 point is not enough to say that it is a finance lease. So I have to actually calculate the present value of MLP and compare it with the fair value to check whether the PV of MLP substantially covers the fair value or not. If it covers, then it is 100% finance lease. If it does not cover, only it covers 30, 35, 40%, then it is an operating lease. Right? But sir, the biggest point is, how will I calculate present value of MLP? Because what is present value of MLP? What is MLP? MLP is lease rental plus guaranteed value. Right? Guaranteed value is not there in the question. So we have to work out the lease rentals. Where are the lease rentals given? Where are the lease rentals given? It is not given. Technically deadlock. You cannot do anything from now if you don't click one point. You cannot do anything in the question. Until and unless you only get a one point clicked. If that one point you cannot click, you cannot do anything, sir. Don't even waste time in exam. You cannot solve the question if that one point is not clicked. And you should remember that. Yes, somebody is answering me. Bharat has answered me at IRR, fair value of the asset is equal to present value of gross investment. Yes, that is the point. And that is the kickstart of this question. Sir, I am at IRR. So whenever we are at IRR, the fair value of the asset is always equal to present value of gross investment. And what is present value of gross investment? Sir, it is nothing but PV of MLP plus PV of URV. And can I say URV is given in the question at 75,000? So when you convert this URV into present value and you write the formula, fair value 7 lakh is equal to PV of MLP plus PV of URV. So you have fair value 7 lakh, you have PV of URV, you can definitely find PV of MLP. And once you get PV of MLP, you can compare it with the fair value. And if it substantially covers the fair value, the first point can be answered. Only the first point can be answered, whether it is a finance lease or not. Second point is still to be calculated. So let us first go and finish the first part. I hope people are understanding this because this is the kickstart. Yes, you are absolutely correct, Mr. Bharat. And I think Sujit also gave me the answer with respect to IRR. And after that, many people gave me the answer. IRR, I'm actually not getting the names. Vishal gave me the answer. Aditya gave the answer. And Gayana gave the answer. I'm sorry if I didn't pronounce your name properly. Sujit, yes, these all people have given the answers correctly that IRR is the point of start. Right, and somebody has also calculated the MLP 6,43,000. Yes, Anshul is giving the answer. PV of MLP 6,43,000. Right, and that is almost 90% of the fair value. So yes, this is a finance lease. So let us start with the solution. Question number 5, right? 92%. Yes, 92%. So first I'll say fair value of asset. We are solving the first part. So fair value of asset is equal to rupees 7 lakhs. Correct? And IRR is given at 10%. So I'll say from lesser's point at IRR, comma, fair value of asset is equal to PV of gross investment. Correct? Now, this is the most important point of the question, the starting point of the question. If you don't click this, you cannot solve the question. Leave it. Don't even scratch your head. You will not get the answer. Right? So therefore, further I'll say the fair value of the asset is 7 lakhs. So therefore, 7 lakh is equal to, I will break up the preview of gross investment. Gross investment we will break up. What is gross investment? Sir, it is nothing but PV of MLP plus PV of URV. Correct? I have broken up the gross investment. Then I'll further say 7 lakh is equal to PV of MLP plus. Now, what is PV of URV? Sir, URV is 75,000. That is the future value. So just multiply it with the discounting factor given in the question for the third year, that is 0.7513. So multiplied by 0.7513. So finally, I can say therefore PV of MLP is equal to 7 lakhs minus, what is the answer that we are getting for this? 75,000 into 0.7513. We are getting 56,348 minus 7 lakh. So PV of MLP is coming to 6,43,652. Just a minute. Okay. Now this is the theoretical content that you have to write and to state that yes, it's a finance lease. What it is, I'm reading. In this case, the lease term is 3 years. Lease term is 3 years. Okay, 1 minute. Is will not come. I'm sorry. Yeah. In this case, the lease term 3 years substantially covers the life of asset. That is 5 years. One point is fulfilled. Full stop. Present value of MLP 6,43,652 also substantially covers the fair value of asset at inception 7 lakhs. That is 92% approx. So 92% approx, we are showing the calculation 6,43,652 divided by 7 lakh into 100. So we are basically calculating the percentage over here. So therefore, due to the above two factors, the lease constitutes a finance lease. So this is the theoretical point that you have to write. Two factors we are fulfilling. First, the life of the asset. I'm sorry, the lease term substantially covers the life of the asset. That is factor number 1. And factor number 2, the present value of MLP also substantially covers the fair value of the asset. That is roughly 92%. So because of these two factors, we can constitute that this is a finance lease. So first part of the question gets over here. Picture is still pending. Second part is also to be calculated. Please copy this down. Yes, Aditya.
Sir, I just had a doubt. So there were 5 conditions, right? And we considered this to be a finance lease only because it satisfies these 2 major conditions, like the fifth major condition
Fifth
and the
is the
second one
major
also.
condition. Fifth is the major condition.
Yes,
See, I
sir.
told all 4 conditions kept aside and fifth kept aside. So technically, if fifth is fulfilling, you can say that it is a finance lease.
All right. Understood.
Because see, majority of your investment value, the investment value made by the lessor is recovered from one lessee only.
Correct.
So
Oh, yeah.
technically,
Okay,
out of my
That's
7
the
lakh
logic.
investment, 6,45,000 I'm recovering from one person only.
Understood.
So 92% I'm recovering from one. So it's a finance lease.
All right, sir. And sir,
Right.
in the exam, is there a chance that this percentage will not be like too high? For example, it'll be 60, 65, 55. So do we consider that to be substantial?
See, anything above 60 you consider substantial, because then, see, I'll tell you one thing. They will form a question where definitely either it has to be an operating or a finance lease. And sir, I'll tell you one thing. In this question, you can see the second part is also given. Calculate unearned finance income.
Unearned income. Yes.
So it is implied
So that
that
gives
this
it
is
a-
going to be a finance lease, because for operating lease, we don't calculate unearned finance income.
Got it, sir. Understood.
Right?
Sir.
Now, Nikita, Raghu, I cannot help if your network is not correct, madam. I cannot do anything. Try to sit at a place where you get a better network connection, or try to sit in an open place so you can hear what I'm speaking, or else switch off your camera and sit, so you will have a better what we say connectivity. I got out of the meeting during question number 6. Ammo. Madam, then you have to go with the recorded lecture back up there. Yes, the PDF will be sent to you at the end of the session. Everybody, one small suggestion: if you are using a mobile connection, that is mobile data, please try to sit nearby a window or try to sit in an open place. Means if you have a balcony at your place or if there is an open terrace or something like that, please go and sit there because you will get a good connectivity. Don't sit in a closed room or something like that. You will have a poor network connection. And Zoom requires at least 7 to 8 Mbps of download speed and 2 to 2.5 Mbps of upload speed for a single user. For users like us, because we have to upload data to almost 120 students over here, we use a very high speed connection. I have already shown my net connection speed to you people also. I'm using a 100 Mbps connection. So in such connections, there will be no laggings. The voice and the video comes at the same speed. So please, beta, I'll send the PDF, not to worry. So second part of the question. Now, sir, second part is calculate the unearned finance income. Correct? Now, the formula for unearned finance income is what? Gross investment minus net investment. And net investment is nothing but PV of gross investment. So can I say PV of gross investment is already available to me 7 lakhs? Correct? Yes or no? Right? And in that also, I have the future value of URV. Now I just want to find out the future value of MLP. Right? So if I get the future value of MLP, I will add it with 75,000. So I will get my gross investment. So my point is, how shall I calculate the future value now? Because 6,43,000 is the present value of MLP. And sir, you cannot say that present value of MLP plus URV 75,000 I will say as gross investment. No, this is the present value of MLP. You have to convert this to the future value. Then only you will get the gross investment, because technically gross investment is the future value. So sir, it is very simple, no rocket science, don't worry. See, present value of MLP, how do I calculate this? Sir, I simply multiply MLP with the sum of annuity factors. Annuity factor is nothing but the discounting rates. Yes or no? Right? So to find out the MLP over here, what will I do now? Therefore, MLP will be equal to present value of MLP divided by the sum of annuity factors. So sir, it is very simple. To find out the present value, what you do is future value multiplied by the discounting rate. So to find out the future value, what you will do? Present value is to be divided by the annuity factors. So 6,43,652 divided by the total is how much? 2.4868. We are getting some 2,58,827. And sir, this is nothing but per annum. This is not the MLP, this is the lease rent per annum. So further what I'll do, multiply by 3 years. Multiply by 3 years, then I will get the total MLP. That is the total lease rentals. These are the lease rentals for 1 year. So the total MLP is 7,76,481 rupees. Next, therefore, gross investment. What is the formula? So it is MLP plus unguaranteed residual value. MLP we just calculated 7,76,481 plus unguaranteed value already given in the question at 75,000 plus 75,000. Total value of gross investment is 8,51,481 rupees. So therefore, unearned finance income is nothing but gross investment minus net investment, that is 8,51,481 gross minus 7 lakh net. So final answer we get rupees 1,51,481. So this is the full solution for this question in one screen. Yes, Aditya.
Sir, I was just wondering that in the second and the fourth question, the logic of fair value being equal to the present value of gross investment holds true, but that's not the case in the third question. Is there any reason why?
Sir, third question, there is a small loophole, sir. And the loophole is what,
Okay.
you know, the life of the asset is greater than the lease term.
Okay.
And the logic is the asset will be further given on lease to some other person also.
Oh, okay. Okay. Understood.
That is why I got your point. You're very good. You understood
Yes.
that point. That technically when we are at IRR, the present value should be equal to the fair value of the asset.
Fair value.
But that is not in
Yes.
that case, because the fair value of the
Okay.
asset is 40 lakh and the present
Okay.
value of the gross investment is only 28 lakh.
28 lakhs.
So
Correct.
so technically there is a scope that after this lease gets over, it will be again given to some other person and balance part will be recovered from them.
Okay. Okay,
Right?
sir. So
Because
if suppose
let me complete 1 minute. Because if this is
yes.
only the one lease, because if this is only the one lease, after this the lessor is not going to lease it to anybody, then lease rentals are wrong.
Yes, he would charge more.
Exactly, he would charge more. He's charging less because he is very much clear that for 5 years I will give it to you, and after that I will give it to somebody else, because the asset will have a life greater than 5 years for sure.
Okay, sir. Understood. So I asked this because like suppose after writing the answer, like what I do is I check if the fair value is equal to the gross investment, and depending on that I check if it's correct or not.
See what happened, you know, when first time I had solved question number 3, I blindly went with the concept that at IRR fair value is equal to the present value of gross investment.
Present value.
And I directly wrote the net investment at 40 lakhs. And I calculated the answer as unearned finance income 3 lakhs.
Oh, okay.
But then I checked once, and then I come to know that the present value is not even 28, 29 lakh. It is not equal to the fair value of the asset,
40 lakhs. Yes, correct.
right? So then the conclusion was made, yes, they are charging lesser lease rentals now, because the only logic is he may give it to some other lessee in the future,
Okay, sir. Understood. Understood, sir. Thank you.
right? And we can also calculate, actually, if this is the only lesser, then we can also calculate what lease rental should have actually been charged by using the same formula that I've teached you over here.
Yes, yes, correct.
Same
correct.
logic we will apply.
Yes.
You will
Understood.
do this for MLP,
Yes, sir.
plus you will also do this for guaranteed value. So you will get the total MLP. And then unguaranteed is also there. You can add up, you will get 40 lakhs. So you will also get your exact
Okay.
lease rent to be charged. It should be greater than 8 lakhs. This is only the one lessee.
Yes, sir. Got
Yes,
it.
you were asking something.
No, sir. That's it. That's
Okay,
it, sir.
okay.
Thank you.
So here, technically, we complete the topic. AS 19 is completed. So I will be sending this PDF to you. Right, I've already sent it in the morning batch. I'll send it to you also now. So we technically complete the topic. AS 19 is over.